So as I said, that preparation of financial statement we will discuss later. Now we will move to the small problems that is very important for examination. You can expect 4 to 6 marks problem from this chapter especially. Claims. What is claims? You know that policyholder is claiming for the insured amount. If the unfortunate event is occurred or happened, they will claim it from the insurance company. Okay, so these claims, normally what will happen, whether all the claims made by the policyholder is settled by the insurance company, generally there will be some rejections, or there will be some litigation, there will be some pending claims which they don't accept as a claim, or which they don't admit. Now the question is, as an insurance company, whether all the claims is my expenses, or only the claims accepted and admitted by me as a claims is an expenses. Whether I should account all the claims as an expenses in my books of accounts, or only the claims which I am accepting or admitting, only I will account it as an expenses. All other claims I will ignore. I will not account it as an expenses. That is the question I am asking. So as per the guidelines, as per the regulation, what is regulation is, if the policyholder is intimating the claim to the insurance company, sir, my bike is lost, I lost my bike, or my godown got fire, or any other loss happened to me. If it is informed by the policyholder to insurance company, as per regulation, what they said is, whenever they are intimating, that point of time itself, you should account it as an expenses. You should not wait for litigation, you should not wait for investigation, you should not wait for admission. Meaning, so insurance company may or may not accept the claim, but they have to account it as an expenses whenever the policyholder is informing to the insurance company. Insurance company should not say, I will account it as an expenses only after I accepting. Insurance company will take time actually. They will not accept immediately. They will take 1 year, 2 year time for investigation. Later on only they will accept the claim amount. But as per regulation, what they said is, whenever it is intimated by the policyholder, immediately you should account it as an expenses. That is what said in the regulation. This is what said here also. Here all this English, all this point is given related to that one only. Okay. So the point is, whenever there is an intimation, same financial year, it should be accounted as an expense. So you should not wait for, insurance company should not wait for investigation report or valuation report or some other report. Okay, survey report. They should not wait for survey report and other things. Immediately they have to account as an expenses. This is the point. This is the question. Okay. So with this knowledge, we have to approach the problem. Question is, which period, which financial year you have to account as an expenses? That is the question. Which financial year you have to account it as an expenses? As per rules and regulation, remember only one thing. Whenever the claim is intimated by the policyholder, on the same year it should be accounted as an expenses. You should not wait for admission. You should not wait for settlement. All those things. Okay, that is the provision. That is the rules. That is the regulation. We'll go to the problem now. So this is the question. Let's go through the question. From the following, you are required to calculate the loss on account of claim to be shown in the revenue account for the year ended 31st December 2012. So we have to calculate claims should be accounted as expenses for the year 31st December 2012. That is the question. So claims, you go through claims: intimated, admitted, paid. You have to consider only intimation here. Forget about admission, forget about paid. Now the question is revenue account. That is their similar to P&L account. There is three account here actually: revenue account, P&L account, balance sheet. I'll explain that later. Revenue account, it's like a P&L account where they will book their expenses and income. So in this account, which claim I should account as an expenses for the December 2012? Which claim I should account as an expenses for the December 2012? So intimated in which year? 2011. Admitted, forget, paid, forget. So intimated which year? 2011. So as per the rules, which year it is accounted? Assuming this is calendar year, not financial year. Financial year is a calendar year. Okay, your financial year is a calendar year, that is January to December, not April to March. Okay, it is January to December. So intimated in which year? 2011. Then I have to account which year as an expenses? 2011 or 2012? 2011 it should be accounted. So this 15,000 in 2012, no job. This 15,000 in 2012, no job is required because it is already accounted as an expenses in 2011 itself. Only intimation you have to take care. Admission, paid, you forget. Then come to 2012. We are in which year? We are in 2012. Which year it is intimated? It is in 2012. Admitted in which year? 2012. Forget about admission. Forget about paid. What is the amount? 10,000 is an expenses. Should be accounted as an expenses in year 2012 because intimated in 2012. Then come to next year. 2010 intimated. No job in 2012. No job in 2012 because it is already accounted as an expenses in 2010 itself. I'll explain how it is. Forget about answer. I will explain how we have to account. Then again intimated in 2010. So no job in 2012 because it is already accounted as an expenses in 2010 itself. Then come to next one. Intimated in which year? 2012. We are in 2012. So it should be accounted as an expenses in 2012 only because it is intimated only on 2012. Then come to next one. Intimated in which year? 2012. Again we have to account this expenses as 2012 only because whatever is intimated in financial year 2012 we have to account it as an expenses. All other things we need not to worry about that. What they are asking, calculate the loss on account of claim to be shown in the revenue account. That is the question. Okay, revenue account means what? It is like P&L account. Expenses income accrued during the year. Expenses income accrued during the year only should be accounted. This is not cash account or bank account. This is revenue account, P&L account, similar to P&L account. Whatever the income earned, expenses accrued, all those things should be accounted in the P&L account. So whatever is accrued only should be accounted here, not admitted or paid. Whatever is accrued only accounted in the P&L account, that is revenue account. Okay. So with this understanding we have to solve the problem. I'll work out the problem now. So I'll explain in a simple manner. So revenue account, it's like a P&L account. Whatever the expenses should be accounted here. 2012. We are in 2012. Okay. So just simply add what is intimated in 2012. What is intimated in 2012? You simply add it. So what is intimated in 2012? 2012 claims intimated 12,000 is intimated, then 8,000 is intimated, then how much is intimated? 1,02,000. What is the total thing? What is the total thing? So 1,22,000. Is it correct? There is an error actually. So first one is 2012, 2012, 2012, 2012. This is not 12,000, this is 10,000. 2012, 10,000. Again 2012, 8,000. Again 2012, 1,02,000. So totally 1,20,000 is the claim intimated during the year 2012. That is my expenses for 2012. Minus, refer the question, claim on account of free insurance. Already we discussed in previous problem. Claim on account of free insurance 25,000. Assuming this is on 2012. Assuming this is on 2012. 1,20,000 minus 25,000. Why I am reducing this 25,000? Because this 25,000 claims is not belongs to my insurance company. This is belongs to some other insurance company. They have to take care this risk. They have to take care this claim because it is reinsured. So 1,20,000 minus 25,000 equal to 95,000 is my claims. Okay. This is what given in the material in a different manner. You can directly account what is accountable as an expenses in revenue account, because they are asking only revenue account. That is based on accrual basis. So what is accountable as an expenses in 2012? Directly you add all the expenses. 2012 intimated, 2012 intimated, 2012 intimated. 3 item is intimated. Forget about all other item because we are in 2012. So 2012 whatever is intimated, that year expenses. Then what about 2011? What about 2010? That is already accounted as an expenses in 2011, 2010 itself. That is an understanding. That is rules. That is regulation. Based on that, whatever the intimation year, the same intimation year, it should be accounted as an expenses. So 10,000, 8,000, 1,02,000 is the total claims intimated in 2012 minus 25,000 covered under the reinsurance is given in the additional information. Minus 25,000 covered under the reinsurance given the additional information. So 1,20,000 minus 25,000 equal to 95,000 is the claims for 2012. Claims for 2012 is 95,000. Okay. So this is the answer. I will go to the next problem now. So in continuation, you have next there is bonus introduction. So after continuation of this problem, so next page, bonus introduction of premium already we discussed, reinsurance we discussed, bonus we discussed, commission on reinsurance ceded accepted. As I said, ceding company is the transferring company and reinsured company is the person who accepted the business. What they are trying to say, commission on reinsurance accepted. What is the meaning? So when I am getting the business from A, as I remember that AB example, A got a business of 1,000 crore business and is sharing with B 500 crore. Out of 1,000 crore insurance policy is sharing 500 crores risk with B. So A is giving business to B. Okay, A is giving business to B. So for that B has to give some commission to A, correct? Because he got a business from business from A. So B has to give some commission to A. That commission is called commission on reinsurance accepted. So I am accepting the reinsurance. For that I have to pay this commission. This is the expenses to me. For B it is an expenses. Okay. For B it is an expenses. Then what about A? A is commission on reinsurance ceded. This is an income to A. Okay. Because A is giving out of 1,000 crore business 500 crore is giving to B. For that assume B is paying 10 crore commission. That 10 crore is an commission on reinsurance ceded. Ceding company is ceding the insurance business, transferring the risk to B company. So he got, the A company got some income. That is commission on reinsurance ceded. Then what about the B? Commission on reinsurance accepted is an expenses for B and income for A. For if it is an income means commission on reinsurance ceded, and if it is an expense means commission on reinsurance accepted. Accepted by B, ceded by A. Accepted by B, ceded by A. Okay. Reserve for unexpired risk. So as we discussed life insurance business, if it is a profit for the current year, life insurance business, what is the rule? 95% should be transferred to policy holders, should be distributed as to policy holders. Okay, 95% of available profit should be distributed to policy holders. That is the general rule. That is for life insurance business. What about non-life insurance business? What is non-life insurance business? That other than this human being, if you take insurance for our business purpose, fire insurance, marine insurance, or any other insurance, theft insurance, all these things are non-life insurance business. In this business also they will get profit, correct? This business also they will use to get a profit, correct? So this profit is also they are not eligible to enjoy. They are not eligible to enjoy fully. They have to transfer something to some reserve for future. If future something is happened, they have to pay from this reserve. They have to transfer something to reserve. Okay. So based on the nature of business, nature of insurance, they have made some provision. They have made some percentage. So all the profits we can't enjoy. Actually, we have to make some provision every year. Provision every year. Why? For unexpired risk. Why? Because insurance policy is not at over, meaning anything might happen in future. So present year profit may not be the actual profit for you. So you have to make some sufficient provision for future losses, expected losses or expected claims. For that we have to make definitely provision. So as per the rules, so if you go through marine insurance, provision for unexpired risk should be 100% of the net premium. Remember the percentage, 100% of the net premium you have to make provision. Why I am making provision? For my future loss or future claims. If anything is happened in future, I have to settle. For that I need money. So I have to create reserve. I have to make some provision for that. If I make provision, then only I have to keep the reserve. Okay, reserve is for the purpose of future settlement or future claims based on the some calculation. That is 100% of the net premium I have to keep it as a provision. And accident, fire, theft and other things I have to keep 50% of the net premium. So we will understand how to calculate all those things. So remember two things. If it is a marine insurance, 100% of the net premium I have to keep as a provision. Provision means I am providing something from my profit or reserve and I am keeping in a separate account. Okay. So if it is a marine, 100%. If it is an other than marine, if it is a 50% of the net premium. Please remember these two things. We'll understand this balance sheet P&L later. So comparatively the small problems are very important. So we'll work out this problem now. So Kush Rao Insurance Company furnishes the following information. On 31/3/2013, it had reserve for unexpired reserve. They have a reserve for unexpired risk, means provision they made. Already they made provision and they have created the reserve for purpose of unexpired risk, means future liability or future may or may not happen, future settlements, future claims. For that they have a reserve of 100 crores already. Okay, it comprised, total reserve is 100 crores. Okay, it comprised 37.5 crore belongs to machine insurance, not machine, it is marine insurance, wrongly given as a machine insurance. You refer it as, you consider it as a marine insurance. Okay, 50 crore is for fire insurance, 12.5 crore is for miscellaneous insurance. So this is the question. In practice, Kush Rao create 100% of net premium of in respect of marine insurance, 50% of net premium respect of miscellaneous insurance. Okay. During the year, this is the premium collected. How much premium collected? For marine 45, fire 107.5, miscellaneous 30, other insurance companies in respect of risk undertaken, other insurance companies in respect of risk undertaken, net premium payable, premium paid payable to other insurance companies on business ceded, 16.75, 10.75, 17.75. What is the meaning? So insured. So this is the premium I am going to collect. Other insurance company in respect of risk undertaken. This is the premium I am going to collect from other insurance company because I did reinsurance. I did reinsurance this month, 17.12, 17.5, 12.5, 10. So I am going to collect premium from other company, other insurance company because I did reinsurance business. Second case. Third case, I did seeding business. I transferred the business to another company. So I have to share the premium. 16.75 I have to share, 10.75 I have to share, 17.75 I have to share with another company. So for example, B company, I have to share this 16.75 with B company, 10.75 with B company, 17.5 with B company because I shared the business with them. This premium also I should share. So I think 45 plus 17.5 minus 16.75. Okay. So we have, that is your net premium collected. Net premium collected. So we have to work out the problem. We will work out. So as discussed, non-life insurance, marine insurance. This one is other than marine insurance. Marine insurance means 100% provision on net premium. Other than marine insurance, 50% provision on net premium. Okay. So in this question you have marine insurance and other two are non-marine insurance. That is fire insurance and miscellaneous insurance. So marine insurance net premium collected how much? 45 is premium plus 17.5 collected from other insurance company minus I am going to pay to other insurance company 16.75 because it is seeded. It is seeding business. This is reinsurance business. This is actual premium collectible. Direct business. Assume it is a direct business. So similarly 107.5 plus 12.5 minus 10.75, then 30 plus 10 minus 17.5. Okay, we will come to marine insurance first. How much provision I have to make every year? 100% on net premium collected. What is 100% here? Net premium is how much? This plus this minus this equal to how much? 45.75 is the net premium. Net premium is 45.75 into 100% equal to 45.75. This is other than marine. Fire insurance. So fire insurance 107.5 plus 12.5 minus 10.75 equal to how much? Equal to how much? 107.5 plus 12.5 equal to 120. 120 minus 10.75 equal to how much? 120 minus 10, 110, 109.25 into other than marine, how much provision I have to make? 50% on net premium collected. Miscellaneous also 50% on net premium collected. 109.25 into 50% equal to how much? 54.63. 54.63. Similarly 30 plus 10 40 minus 17.5 how much? 40 minus 17.5 22.5 into 50%. Net premium collected how much? 22.5 into 50% equal to 11.25. So this year I have to maintain this much reserve. 47.75 I have to maintain. 54.63 I have to maintain. 11.25 I have to maintain. Meaning I have to make provision. I have to keep this much amount. I have to keep this much amount in my provision account. So provision account. Understood this one? 100% on net premium collected. Net premium is 45.75 into 100%, 45.75 I have to maintain. 45.75 I have to maintain reserve. Here 54.63 I have to maintain. Net premium into 50%. Net premium into 50%, 11.25 I have to maintain as a reserve in my reserve account. What is my opening balance reserve? Closing balance? We have to do it accordingly. We have to go to the question. So as per the question, reserve account, unexpired reserve account, particulars, then marine, fire, miscellaneous, opening balance, buy balance, brought down, available in the question 37.5, 50, 12.5. This is my opening balance reserve account. I already have this much amount. What should be my closing balance? That we have to consider. As per our workings, what should be my closing balance? To balance, carry down, marine, fire, miscellaneous. What should be my closing balance? Closing balance should be, for marine it is 45.75 as per our workings. 45.75. How? 100% on net premium collected, 45.75. Then 54.63. How? 50% on net premium collected. Okay, refer our workings. Then 11.25 should be my closing balance, 50% on net premium collected. Opening balance this much I am already having in my account. Closing balance I should have this much. So extra how much is required? My opening balance 37.5, closing balance is how much? 45.75. So extra how much I have to create during the year? From P&L account how much I have to transfer during the year? That we have to see. Revenue account debit to unexpired risk reserve account credit how much? By revenue account. What is the closing balance? 45.75. Here how much closing balance? 45.75. 37.5 is opening balance. Closing balance is 45.75. So extra provision, extra reserve how much I have to create? From where I have to create? From my revenue account. Revenue account is like my P&L account. Income will be there, expenses will be there, profit will be there. From profit I have to transfer to unexpired risk reserve account. So 37.5 is my opening balance. Extra I have to add 8.25. Then only I will get 45.75. Then only I can keep reserve of 45.75. Then what about this one? Here what is the closing balance? 54.63. What is my opening balance? 50. What is my closing balance? 54.63. How much extra reserve I have to create? 4.63 I have to create. I have to transfer from revenue account to unexpired risk reserve account. Because I need extra. Because my opening balance is only 50, but I need 54.63 as per my workings. So extra I have to transfer from my revenue account 4.63. What about this one? Miscellaneous. Opening balance 12.5. Closing balance how much? 11.25. Opening balance I already have 12.5, but closing balance I have to keep only 11.25. Already I am having excess. Already I am having excess in my opening balance, extra reserve in my opening balance. I have extra reserve in my opening balance. So from reserve account to revenue account I have to transfer, because I have extra reserve in opening balance, but I have to keep only 11.25, but I am having 12.5 in my reserve account. I have to keep only 11.25, but I am having already 12.5 in my opening balance. So difference to revenue account 12.5, meaning I am transferring from reserve to revenue account. Reserve to revenue account. Reserve account is debited, revenue account is credited. Because excess reserve I am having 12.5 is opening balance, but I have to keep only 11.25. So 1.25 I am transferring. So 12.5. Okay. So the same thing has been journal entry also we can put. What is the first journal entry? First reserve is created, that is marine insurance reserve is created. So revenue account to unexpired risk account we are transferring. Marine insurance revenue account debit to unexpired risk reserve. How much? 8.25. Second one, fire insurance revenue account is debited to unexpired risk reserve account. How much? 4.63. Third one, how much? Here we have excess. Here we have excess amount. So we have to transfer from unexpired reserve to revenue account. So unexpired reserve account is debited to miscellaneous revenue account is credited for 1.25. Okay, please refer the material answer. So the next question is, from the following figures, books of fire insurance, general insurance company show the amount of claim it would appear in the revenue account. They are asking how much should be presented as a claim under the revenue account. Claim is an expenses or income? First of all, claim is an expenses. Okay, so we have to go through the points. Claim paid is an expenses. Claim payable is also expenses. Outstanding expenses, year-end expenses, opening, outstanding expenses, year-end expense should be added, opening should be deducted, general knowledge, general P&L, whatever opening we have to deduct, closing we have to add it. Then claims received. Claims received is an income, 2,30,000. Claims receivable is also an income, closing income, opening income. But we have to present only one item, that is claims. Claims is an expenses. So any income related to this expenses should be adjusted on these expenses. Though this income should be adjusted with this expenses, net figure only we have to present. And total expenses of management, total expenses is 2,30,000. Out of which surveyor fees 35,000 and 45,000 is legal expenses for settlement of claim. So surveyor, who will do surveyor? For what purpose he is doing survey? For the purpose of valuation of claim. For the purpose of valuation of claim, surveyor will do survey. So this is related to claims. Total expenses is 2,30,000. That is total management expenses. Out of which claims related expenses 35,000. And 45,000 is also related to settlement of claim. That is also related to claim. So 35,000 is a claims related expenses. 45,000 is a claims related expenses. Okay. So totally 80,000 related to claims. That also we have to remember, because they are asking what is the total expenses of claim. Claims only we are going to present. So add all the expenses and deduct anything income related to this expenses. From that expenses deduct this income and add other expenses which is related to claims. That is 35,000 surveyor fee, 45,000 legal expenses. Okay. With this introduction, with this understanding, we have to approach the problem. Expenses, claims we are going to present, that is an expenses. So ultimate objective is presenting expenses. Any related income should be adjusted with these expenses. Okay, with this understanding we have to solve this problem. Okay, I will work out this problem now. So I will be working the claims. Ultimately, how much presented as an expenses under the claims. So claims, you have two business. One is direct business and another one is reinsurance business. What is claim paid during the year? 46.7 lakhs, 7 lakhs. What is the total? What is the total you have? 53.7. This is claims paid during the year plus outstanding at the year end. Plus outstanding at the year end. How much? Both direct reinsurance. Direct business, reinsurance. How much? Outstanding at the year end. 8.12. 8.12.53, that is 53,000. You know that outstanding expenses year end should be added and minus opening balance. Opening balance outstanding expenses. DB, direct business, RI, reinsurance. What is the amount? 7.63 deducted 0.87 deducted. Okay, what is the amount we are getting? What is the amount we are getting? So 53.7 plus 8.12 plus 0.53 minus 7.63 plus minus 7.63 minus 0.87, how much? Just work out. So 53.7, then add all these items, you will get 8.12 plus 0.53, 62.35, you will get it. Because outstanding at year end should be added and opening outstanding expenses should be deducted. Deduct it. If you deduct, how much you will get? 53.85. After deducting, you will get 62.35 minus all these things. If you deduct, you will get 53.85. Okay, so this is question is partly completed. So after this 53.85, so this claims paid plus outstanding at the year end minus opening outstanding at the opening balance. After that you are getting this much amount. This is expense part, this is claims paid part, then minus anything related to income. So I am writing the continuity here. Claims continuity. So 53.85 continuation 53.85. Then whatever the income, related income should be deducted. Claims received how much? Claims received how much? 2.3 during the year. Then anything opening balance, closing balance? Yeah, we have a opening balance and a closing balance also. What we will do? So together we will deduct. 2.3 is my claims received during the year plus outstanding at the year end how much? Outstanding at the year end how much? Plus outstanding at the year end how much? 1.13 minus opening balance how much? Year end opening balance how much? 0.66, that is 66,000. So 2.3 plus 1.13 minus 0.66 how much? 2.3 plus 1.13 equal to how much? 3.43 minus 0.66 equal to 2.77. This is the ultimate ultimate claims things should be deducted from the ultimate income should be deducted from the expenses 2.77. So for 53.85 minus 2.77, 53.85 minus 2.77 how much? 2.77 how much? 51.08. 51.08 plus expenses related to claims. What are the things? You have surveyor fees, you have legal fees, correct? What is surveyor fees? How much? 0.35 is the surveyor fees and 0.45 is the legal fees, correct? Then add it, you will get 51.88. This is total claim expenses. Claim expenses is 51.88. Okay, this is what given in the material in a different format, but this is the answer, ultimate answer. So 51.88. How it is arrived? Claims during the year 53.7 plus outstanding at the year end, claims outstanding at the year end, add to business, then you will get 62.35. 53.7 plus 8.12, this you will get 62.35 minus opening outstanding expenses. General knowledge, you know, closing should be added and opening should be deducted. 53.85, you got 53.88 continuation. Then any income related to expenses should be adjusted against that expenses. So income, claims received is 2.3, that is an income, plus closing receivable at the year end 1.13 is added, minus opening receivable is deducted, net is 2.77, that is deducted here on this expenses. 53.85, 2.77 is deducted, you got 51.08. Then claims related expenses, surveyor fees 0.35 and legal fees 0.45. If you add, you will get 51.88. That is the total claims expenses. So with this, the major portion of insurance is over. You can expect a problem from these small topics rather than a balance sheet and P&L. So there is one more problem similar to this problem. You please work out, and there is one small error is also there. You please correct that. With this insurance, today's class is over. We'll meet in our next class. Okay, thank you.